Well, welcome to the monthly edition of Urgent Care Management Monthly. Hey, Amanda.
Hi.
How are you?
I'm good. How are you?
Good. We're Chief Financial Officer, and we're going to talk today about securing loans. And it's been an interesting process learning how to secure loans for us and the different ways we've done it over the years and different times. And remember, we're kind of talking to some people who may have done this before, but we're also talking to a bunch of people who may have never done it before. And this may be their first time ever going out and trying to secure a loan. So if we were going to give some advice, what would you say? I mean, I've noticed here in the notes, it talks about relationship building. What do you mean by that?
Well, you need to go and find the loan officer, the senior loan officer, or maybe the bank president. Get to know them very well. That way, they will be on your side, and they will help you understand their policies, their procedures, and what they are looking for, what they need from you. And it also allows you to just be able to pick up the phone and call them and say, hey, I need a loan for insurance, or I need a loan because I'm starting getting a new building, or whatever, and they'll be more able to help you and able to help you because they actually know who you are and what you're about.
Yeah, I think that's really been one of the keys to our success is we don't just have one, but we have several bankers that we can pick up the phone. I have their cell phone numbers, you have their cell phone numbers, and we can pick up the phone and say, hey, we're looking for this and that. And it's a win-win. I mean, that's what they're in business to do, right? Make loans, good loans, and as long as you're a good credit risk and they like you, I think it does make a big difference. Good. And so, speaking of that, while we're on that subject, you recommend somebody starting out make that relationship with one banker, try and make it with more than one banker? How would you suggest that?
I would recommend they do it with more than one, because if you shop it, it's like anything else. They'll be competitive, and when they all want your business, so they'll be able to give you the lowest interest rate possible for whatever you're looking for.
Yeah, I completely agree with that. And you kind of get a sense of who does what, which way, and which way you like to do it, who you like dealing with a little bit better. Good. So it says, does the bank's policy fit with our sort of philosophy? What does that mean?
Well, the bank, depending on their rating, and because some banks are smaller than others, and depending on how big you want to grow and how fast you're going to grow, it depends on the bank.
Right.
Because if their rating is small, then they may not have the money to loan you.
Right.
And with some banks, they will cap each person or each business at a certain amount of money. Yeah. So that way you have a broad spectrum, and you may find more capital at one place than you do another.
We discovered that the hard way, didn't we?
Yes, we did.
Yeah. We sort of we became the largest customer our bank had, and so then pretty soon they couldn't loan us any more money, not because they didn't want to, but there's only so much they can loan each customer, and so that can become a problem. It's a good problem to have, right?
It is a very good problem, but it's still a problem.
Still a problem. We're not complaining about the problems. Good. And what does it mean by knowing the bank's regulators?
By knowing the bank's regulators, you know where or who's coming in to audit them. And with knowing who's coming in to audit them, you'll know what they're expecting, what they want, and you can make sure the information is always there and up to par. And it also makes them be like, hey, they're really good customers, you want to keep them, because they make sure your assets are liquidable and where they need to be. Where
they should be at what times that the auditors come in, because the banks are very regulated also. Good.
Yes.
So somebody's going to put together a financial packet. They've never done that before. In fact, if you said to them you need to put together a financial packet, they'd have no idea what you're talking about. Okay, so if somebody's starting from that place, is the first time they've ever done it, this is a person starting their first business, or they just came out of residency, it's their doctor, they don't know anything about that. Where do you start? How do you put together a financial packet? What do you take to the bank?
Well, if you're first starting out, then it's obvious that the LLC or the partnership or whatever you formed is not going to have a tax return. So if you are in a partnership, you will need to give them 3 years of bank statements. Not bank statements, I'm sorry, 3 years of financials for yourself, which is your personal financial statement. And you will need to give them 3 years of tax returns for yourself, for if you're putting it in your trust name, and also your partners and whatever they're going to use. And then just whatever else you have that will go up for collateral if you have to use that.
Right. But if you've been in business a couple of years and going for a loan, then you'd add your business
financials, the business tax returns, and just throw in a small letter of who you are, what you're trying to do, and a thank you to them for giving you the opportunity to work with their bank.
Good. And send that out to 2 or 3 at the same time? Okay. So next thing is talking about, I mean, they're going to look at you based on credit risk. So as a company, if somebody's just starting out an urgent care center right now, they've never done this before, how does their company, how does their urgent care center maintain a good credit rating with all the creditors?
Well, just to always pay your bills on time and make sure you are always in contact with your banker, with your loan officer, or the president, or whoever that person is at the bank that you've created the relationship with. So let them know if there's any issue with your accounts receivable, that at any time you are having a cash flow issue, you just pick up the phone and call them and say, hey, you know, I understand that my payment is due on this day, but we have a small problem with credentialing or whatever the case may be, and just keep them well informed.
Yeah.
That way everything works smoothly.
Yeah, it's amazing how many times they'll help you, and if you have the good relationship with your banker, a lot of times they'll be calling you saying, hey, you might want to be aware of this situation so it doesn't affect your credit. So I think that goes back to what we talked about in the beginning, which is the relationship building and keeping that relationship good. Awesome. Hey,